A week before Elon Musk made an offer to buy Twitter to the company's board of directors, he was having a TED Talk. And in that TED Talk, Elon had said he had no interest in a Twitter takeover, stating it was a recipe for misery and that everyone would blame him for everything going wrong on the platform.
I asked you whether you were thinking of taking over. You said no way. You said, I do not want to own Twitter. It is a recipe for misery. Everyone will blame me for everything. What on earth changed?
No, I think everyone will still blame me for everything.
This would prove prophetic since Elon Musk is now showing signs that he might not want to buy Twitter, at least at its current valuation. Earlier this month, Elon Musk shocked the world when he tried to buy Twitter. There was a lot of back and forth between Elon Musk and Twitter leading up to the deal. Twitter kept finding ways like the poison pill provision to stop Elon from taking over the company. The drama finally ended when Elon Musk finally made an offer to buy Twitter at $54.20 a share. Faced with a whopping $44 billion, Twitter executives had to take the deal. So both Elon and Twitter signed a contract to buy Twitter. However, it seems that Elon is trying to back out of that deal. You might think that's impossible after the lengths Elon Musk went through to buy his Twitter stock in secret, waiting 10 days after the deadline for his SEC filings so he could get a $140 million discount on Twitter's stock price. All the hype about Elon changing Twitter for the better, bringing back President Trump's Twitter account, promising to get over 900 million users to flock to Twitter so he can 5x Twitter's revenue from $5 billion up to $26 billion by 2028. So let's see what Elon is saying. Apparently, Elon's reason for not wanting to go through with the Twitter deal is because of bots. He has been making a lot of noise about fake users on Twitter and spam bot accounts on the site. Fake users have always been a problem on Twitter. Between January 2018 and June 2021, there have been 29 million reports of spam accounts on Twitter. A study done by the University of South Carolina estimated that nearly 48 million accounts on Twitter are actually bots. Postponing the deal. Elon Musk is saying he's postponing the deal to buy Twitter until Twitter can give him a satisfactory answer. Twitter was asked to prove that fewer than 5% of Twitter's 200 million daily users are spam bots. He also mentioned that he wants to buy Twitter at a much lower price than he originally offered because of Twitter's bot problem. Elon Musk tweeted a meme he made showing himself as a SpaceX astronaut held at gunpoint after asking Twitter if most of the site's users were actually fake bot accounts. While the astronaut representing the Twitter board of directors pointed the gun back at Elon's head while admitting Twitter users were all bots from the start. On the left side of the meme, you could see multiple Twitter bot accounts posting the same comment. John McCain just made a startling public accusation against Trump amid phony news memo release. This comment was referring to a controversy where a memo written to Mr. Nunes alleges that the FBI had relied on questionable sources to get a warrant to wiretap the former US President Trump's phone lines to find information to take him down. The controversy itself was not important. The way the tweet spread was. It was alleged that the Russian propaganda teams had used Twitter bots to promote the hashtag release the memo to embarrass and compromise trust in the American government. While Twitter had claimed there were no Russian Twitter bots using the release the memo hashtag, a popular news agency, CNN, showed the hashtag was constantly pushed by over 1,000 newly created Twitter accounts, casting doubt on Twitter's response and showing Twitter was hiding its fake user accounts and showcased its inability to deal with bots on the site. Through his tweet, Elon Musk is trying to highlight Twitter's bot problem. Why he's doing this, we do not know. It could be because he actually wants to pay a lower price for Twitter stock in the Twitter buyout deal, or it could be because he's trying to make an excuse not to buy Twitter. Either way, Elon Musk is indicating he wants the deal postponed, and Twitter wasn't having any of it. Twitter is unhappy. Twitter was not happy with Elon's proposal and urged that the Twitter deal should continue as planned. Twitter's lawyer and head of policy, Vijaya Gadde, has said that there was no such thing as a deal being on hold, pushing back on Elon's reluctance to purchase the company. Twitter executives are telling employees that Elon's agreement to buy the company had not changed and the billionaire had to keep his promises. Twitter had made its stance clear. They would not renegotiate Twitter's price per share of $54.20, which Elon Musk had promised to pay. Twitter's bot problem. Elon Musk is adamant that he would not buy Twitter because he believes that almost 20% of Twitter accounts are bots masquerading as humans. Twitter is countering that argument, saying that less than 5% of its daily users are spam accounts, the same number it reported to the SEC. But Twitter CEO does admit those estimates may be higher. Elon Musk is asking the Twitter board to prove their company estimates are correct and stated his offer to buy Twitter was only based on Twitter's SEC filings being accurate. Parag Agrawal, Twitter's CEO, was alarmed by the news and took to Twitter to refute the billionaire's accusations, posting tweet after tweet explaining why Twitter did not have have as many bots as Elon Musk thought. Elon in response sent the CEO poop emoji, showing he seems uninterested in what the CEO has to say. Elon Musk said the whole point of buying Twitter was to improve it, and it wasn't about the money, so people are confused about why Elon is making such a big deal about Twitter bots right now. Didn't he carry out his own due diligence before signing the Twitter deal? Turns out he didn't have to. He knew about Twitter's bot problem from the get-go. Years before the Twitter deal was even a thing, Elon had posted tweets talking about the various bots on Twitter way back in 2018. So the way he brought up the bots issue shows that he wants something. It almost seems like a contradiction, like he's trying to get something out of this. Either he wants to buy Twitter at a cheaper price, or he is trying to back out of the deal. No one knows for certain except for the man himself. Having said that, if Twitter's SEC filing, which reports only 5% of their platform's users are bots, is false, then it means that Twitter has committed fraud, and Elon would have every right to demand a lower price for Twitter. Twitter has so far refused to provide detailed insider reports which prove Elon's claims are bogus, or did they? Elon Musk recently tweeted he was going to do a random sample size of 100 followers on Twitter to see how many bots there are. Now 100 samples was a very small number, so any data received from the experiment would be inaccurate. But Elon followed up by tweeting he picked 100 as the sample size number because that was what Twitter used to calculate the less than 5% fake spam and bot accounts on the platform. A day later, Elon would send out a tweet telling his followers how Twitter's legal team had called him back, complained that he violated their NDA, their non-disclosure agreements, by revealing the bot tag sample size was 100, and confirmed that the call actually happened. We can confirm two things through this tweet. First, Elon Musk is Twitter management's worst nightmare, and second, Elon may have some grounds to renegotiate Twitter's price per share if he's telling the truth, because Twitter was silent on the issue. You can't back out. Elon Musk is taking a lot of risks by toying with the deal he inked with Twitter. While free speech is always important, Elon's disparaging comments towards the company may give Twitter enough evidence to take the billionaire to court. However, Elon shows no sign of stopping his attack on Twitter. Elon Musk seems intent on not buying Twitter, but is it really possible to back out of the Twitter deal and simply not buy the company? Unfortunately for Musk, the contract to buy Twitter, which he signed, had clauses and conditions to stop Elon from backing out of the deal. The deal states that if Elon Musk fails to complete Twitter's buyout, then he will be forced to pay $1 billion as a termination fee. To make it fair, if the Twitter board of directors refuse to sell the company to Elon, they would be the ones who would have to pay $1 billion as fines. Penalty is there to stop the agreement from being broken in the first place. Now, you may think that $1 billion is no big deal to Twitter since it is a large company. Elon Musk's own net worth is over $200 billion. The thing is, most of Elon's money is tied up in stocks, mainly stock options in Tesla shares, so Elon currently has less than that. According to Bloomberg estimates, Elon Musk has $3 billion in cash, so paying $1 billion would be a third of the cash he currently has. That's a lot of money, but it ultimately doesn't matter because Elon doesn't use much of his money in the first place. He doesn't even have a proper house. Elon has sold all of his 7 luxurious properties and lives in a small rental home worth $50,000 near his SpaceX factory in Texas. Sometimes the billionaire sleeps in his friend's spare bedrooms. Taking $1 billion from $3 billion still leaves Elon with $2 billion, enough cash to live like a king for decades. So that's it then. Elon can just pay the $1 billion and he can choose not to buy Twitter. After all, $1 billion is nothing to Elon Musk, the richest man in the world according to Forbes' rich list. Well, it's not that simple. Even if Elon pays the $1 billion, Twitter could still sue him using the contract he signed. Further complications. When Elon was trying to make the Twitter deal, he was rushing to make the deal final as fast as possible. So he made the mistake of allowing Twitter to add some seller-friendly clauses in the contract he signed. One of them was Twitter's right to sue Musk for specific performance. This is a special clause which suspicious Twitter executives put into the contract because they suspected Elon wouldn't buy the company. Specific performance is a common clause used by companies since the financial crisis of 2007. Before the financial crisis, leveraged buyouts of large companies like Twitter had very low termination fees, so people who promised to buy a company but didn't want to follow through only had to pay 3% for the company they were trying to acquire. Once they paid up, they could just walk away without buying the company. However, since large firms like Blackstone and Apollo have abused this system of trust, those looking to sell the company will often shove in higher termination fees along with the special performance clause to protect the company against buyers who decide not to buy the company at the end. In Twitter and Elon's case, what the specific performance does is that it gives Twitter the right to sue Musk, and if Twitter wins the suit, Elon Musk will be forced by the courts to continue to buy Twitter whether he likes it or not. Elon's refusal to buy Twitter could spiral into a long drawn-out legal battle with Twitter, wasting more of Elon's money and limited time which he could be using for Tesla projects and his dream to send man to Mars. It doesn't look good for Elon as the buyer, since recently there was a case in Delaware where the buyer was forced to buy a company despite having legitimate reasons not to. The buyer, Kohlberg & Co., did not want to buy Decopac, a cake decorations business, and cited the pandemic dried out the company coffers, but the courts rejected Kohlberg's argument and forced Kohlberg to buy Decopac. Elon could try to sue Twitter to avoid buying the company, but he would have to prove Twitter had done material adverse effect. Proving Twitter's SEC filing was misrepresented and Twitter's platform was made up of more than 5% bots is one thing, but proving that Twitter's bot had an adverse effect on earnings is another. Material adverse effects are hard to prove in court, so the court battles might eat up more time than Elon anticipated. Twitter's drop in value. Twitter shares have taken a tumble since Elon Musk tweeted the company's shares are priced too high and dropped further after he decided to put his Twitter acquisition temporarily on hold, dropping by almost 27% in the past month. Twitter now trades at $38 a share, which was lower than when he made the offer to buy Twitter. Previously, Elon had promised to pay for Twitter's stock while the stock price had been much higher. Elon Musk's wealth drop and investor backing. Inside the company walls, things have not been going well for Twitter. The company has been struggling to expand its user base, and its ad sales are slumping while its bigger social media competitors are picking up steam. It announced a hiring freeze while 2 of its senior executives have been fired. Now, Twitter's valuation has been lowered and its human capital has been reduced. Elon might be trying to renegotiate for a lower price than what he initially promised, which was $54.20. The margin call problem. Or Elon doesn't have much money on hand, so he had to prepare money through various ways. Elon Musk has sold $8.5 billion worth of Tesla shares and has received $13 billion of loans from banks that were borrowed against his Tesla holdings to pay for Twitter. On another note, Tesla's stock price has taken a nosedive, dropping from a high of $1,000 down to $650. That's a steep 44% decrease in the stock price. That's also over $380 billion of money gone from Tesla stock. While Tesla's stock price has always been prone to wild swings in the stock market, investors have been bearish on Tesla ever since they found out that Elon had sold his Tesla shares, presumably to fund his Twitter buyout. This combined with the wider tech stock meltdown in the markets led to the drastic drop in Tesla stock prices this month. The drop in Elon's net worth came at a bad time. To secure the $12.5 billion margin loan to buy Twitter, Elon had to put up around $62.5 billion worth of Tesla shares as collateral. And we all know in the margin loan, if stocks you've pledged fall far enough, you'll be forced to sell the shares to meet margin requirements. So Elon shouldn't want to be margin called if he doesn't want to sell Tesla shares. The risk that Elon might be margin called is quite high if Tesla stock drops drastically. If Tesla's stock price drops below $570 per share, then Elon will be margin called. Being forced to sell Tesla shares will have wide rippling effects, dragging Tesla's stock price down further. Can anyone give me more money? Let us remind ourselves that most of Elon's money is tied up in Tesla stock, so he had to get money from other people to buy Twitter. The reason being he can't pony up more cash. To stop himself from being margin called, Elon has to raise more money from other sources, and raise them he did. $44 billion might seem like a lot of money to borrow, but Elon is a billionaire, so there's plenty of people who are willing to lend him the money to acquire Twitter. Prominent investors bankrolling Elon Musk included Saudi Prince Al-Walid bin Talal, who promised 35 million Twitter shares worth $1.9 billion, Oracle founder Larry Ellison provided $1 billion. The Binance Crypto Exchange founder Changpeng Zhao gave $500 million for the cause. Boring Company backer BY Capital tossed in $800 million. Qatar's Sovereign Wealth Fund gave $375 million, while SpaceX backer Alia Capital Partners gave $360 million. There were plenty of eager investors, like venture firm Sequoia Capital, lining up to help Musk. These 19 investors, which provided money to help Musk buy Twitter, contributed an estimated $7 billion to the Twitter deal. With the new funding, Elon managed to cut his $12.5 billion margin loan by half to $6.25 billion, essentially reducing the amount of money he needed to borrow against his Tesla stake. By borrowing only $6.25 billion, Elon can withstand a Tesla share drop to around $420 per share before his margin call and forced to sell Tesla shares, lowering the risk to his personal wealth and safeguarding his position as Tesla CEO. The money Elon will have to put up personally for the Twitter buyout will be cut down to $20 billion as well. This is all fine, but the additional investors mean Elon Musk will find it harder to back out now, because he'll not only have to deal with Twitter and the banks, he will have to deal with his investors, some of which are firms which back his futuristic projects like the Boring Company and SpaceX. Compromise. There might be a possible way for both sides to reach a compromise. There was one precedent in 2021 where Tiffany & Co. had sued a French company that sold Louis Vuitton bags because the latter had failed to close a deal. LVMH signed a contract to buy Tiffany & Co. but decided not to because the pandemic had destroyed demand for Tiffany's jewelry line and LVMH wanted to back out of the deal. They claimed the jewelry business was no longer worth what it once was, so the deal was no longer possible. Both sides did manage to settle outside of court by lowering the buying price slightly, so Twitter could just betray its shareholders and agree to Elon Musk's lower price per share to force the deal through. If Elon does this, he might sour the relationship he will have with the executives in Twitter, as Twitter executives will be the one under his beck and call in the future. So it pays to be a little more tactful when dealing with future allies. Twitter is keen on closing the deal at $54.20 a share. However, if anyone knows how Elon behaves, they will know his ability to do what he is told, even though it was what he promised to do, is almost non-existent. Elon agreed absolutely with Ian Miles Chong's tweet, suggesting if 25% of Twitter users were bots, then the Twitter acquisition deal should cost 25% less. Elon Musk cannot back out of the deal, but he wants to buy Twitter at a cheaper price. Twitter's falling share price down to $38 despite Elon's promise to buy the stock at $54.20 a share shows shareholders are not confident Twitter can get Musk to finalize the deal or pay $54.20 a share. The likelihood of Elon getting a discount on Twitter shares seems quite possible. Regardless, Twitter shareholders must approve Elon's deal to buy Twitter before it can be finalized. If the majority votes favorably to approve the bid, then all Twitter shareholders must sell their stock and Elon must buy the stock. Twitter clearly wants Elon to buy the company, while Elon Musk won't buy Twitter unless he can buy it at a cheaper price. So what happens now? We'll have to wait and see. Like and subscribe.